The most difficult part of owning Bitcoin is buying it, holding it, and doing nothing. And the reason for this is that people want to make investing and money and really everything they do, they want to make it complicated so that they can tell everybody that they did this complicated thing and they succeeded and they did really well. I feel like it just makes for a better story. Whereas if you just told people that you bought Bitcoin and you held, it's not as fun. It's not as interesting. People won't ask you, oh, how much leverage did you take on? Oh, how much were your returns? Because they can just search for that. This is the hardest part of Bitcoin because people want to tell everyone that they avoided the volatility. They sold the top, they bought the bottom. They don't want to go through the volatility themselves, but going through the volatility is what makes you wealthy. It's what makes you get used to holding on to Bitcoin. And that's what gets you through the difficult bear markets, the flash crashes, the times when everybody else is panicking. That's what makes it so that you end up buying instead of selling. And in this video, I want to go into this in depth. Let's get started. One of my close friends started buying Bitcoin just a few days ago. And right after he bought, we saw the flash crash. So he bought at something like 119,000. I don't know exactly how much he bought. I didn't ask him for that, but that was his first purchase. And as soon as he bought, he went through one of the worst liquidation events in all of Bitcoin's history. Even as a result of FTX collapsing, there weren't as many liquidations as there were as a result of one tweet from Donald Trump. Of course, there's probably other things going on in the background, but the point here is that as soon as he bought, he saw the price go down, and I don't know if he panicked. He didn't really message me about whether or not he panicked. He said, obviously, this is what would happen after I buy. Maybe he's used to it. Maybe he knows that this is what was going to happen. But I hope that he gets through it. I hope that he gets through owning Bitcoin and he gets to the other side of this, because at some point there will be a bigger drop. Then there will be a bigger drop. You'll see the dollar value of your Bitcoin fall and rise by bigger and bigger amounts over time, because Bitcoin's growth is based on percentages. All asset growth is based on percentages. So let's say, for example, 10% today, maybe let's say 15, $12,000 or so. But in the future, a 5% change may end up being $50,000, and Bitcoin's price falls $50,000, even though it only fell 5%. So you have to get used to that. You have to get used to Bitcoin's price fluctuating and moving up and down. And I think that one of the easiest ways to do this is to look at Bitcoin's 4-year moving average. This site is charts.bitbo.io/SMA 1458. If you just go on Google and search Bitbo 4-year moving average Bitcoin price, you'll find it. So you can see here the dots that are colorful are just the daily price of Bitcoin. So you see the price at the end of the day. If you get rid of the line at the bottom, all you see is this volatile asset that goes up, comes down, goes up, comes down, and it makes you want to trade it. It makes you want to avoid the volatility. The issue is that what people do is they try to avoid it and then they miss out. They try to avoid the 10, 15, 20% drops, and then they miss out on the 40, 50, 60, 70, 80% increases in Bitcoin's price. So, for example, maybe you sold here at around $20,000 in 2017, and then you got bored or you didn't buy back when Bitcoin's price fell. And today, Bitcoin's price is 5 times more than whatever you would have sold back then. So if you sold at 17,000 back then, today it's 6 times more. If you sold at 20,000 back then, it's 5 or 6 times more, whatever it is. But it's way more than whatever the price was back then. I think that the hardest part of buying Bitcoin is holding and doing nothing, because people don't want to go through this volatility. They don't want to handle the pain of seeing their asset go up and then come down, or seeing their hard earned dollars decrease in purchasing power. They don't want to see that. But if you hold on to dollars, you're going to see that anyways. If you hold on to dollars, you're guaranteed to lose purchasing power. So think of it from that perspective. The way that I got over this is by understanding that when Bitcoin's price goes down, eventually it will recover. It's not going to go to zero. I think there are enough people around the world who want to own Bitcoin to make it so that the price never goes to zero. On the other hand, when Bitcoin's price goes up, it may never come back down to the prices where you sold. So let's say you own one Bitcoin and you sell at $113,000 today, 113, $114,000, whatever the price is today. You sell at that price, expecting that in 2026 the price will go down to 30K or 60K or 70K, and you'll get back your Bitcoin at a discounted price. What if that doesn't happen? What if Bitcoin's price never goes back below 100K again? You've already paid the taxes on the Bitcoin that you owned. Let's say you bought at the bottom, you sold at the top, you pay 30% taxes, you've lost $30,000 of your total Bitcoin holdings, or 30% of your total Bitcoin holdings, just because of taxes, because of the capital gains taxes that you would have paid. And now you're expecting that Bitcoin's price will go below whatever your cost is after taxes. So it'll go to, let's say, $50,000 so that you get a discount of 25 to 30%. But what if that doesn't happen? What if you sell your Bitcoin and then you never get back the same amount again? That's the thing that really worries me. Let's say I get to zero point 0.1 Bitcoin and I sell it at the current price of $11,400. And after I sell it, it goes up and then it never comes back down to these prices again. What do I do? How do I get my Bitcoin back? I can't. I have to create more value. I've lost the Bitcoin that I have, the pristine collateral, the financial freedom asset that I have. I've lost that winning lottery ticket because I wanted to hold on to pieces of paper because they gave me peace of mind. The way that I see it, you should focus on the average price, not the price at the end of the day. And I want to make it fully transparent to you. This is my first bull market, and I haven't dealt with a full bear market where I have all of my assets in Bitcoin yet, but I'm ready to deal with it whenever it happens. Whenever Bitcoin's price drops 50, 60, 70%, I'm okay with it because I know that over time it will go back up. I'm going to use that opportunity to buy more Bitcoin. In 2022, if the price hadn't fallen from 65, 70K all the way down to 16K, how many people wouldn't have as much Bitcoin as they have today? How much of that Bitcoin would have been owned by people who don't truly deserve the Bitcoin that they have because they don't truly understand it? They over leveraged and they made all these stupid decisions. How many people of that, how much of that Bitcoin would be owned by these people who don't truly deserve to own it? And how much of it would not be owned by people who discovered Bitcoin as a result of that all time high and didn't really start buying until the low? All of that Bitcoin would still be held by the people who bought up here and they'd make a lot more money. I think most of the people who put all of their net worth into Bitcoin at these highs probably didn't do much research on what they were buying. So if they just held, maybe they would have made a lot of money, but they wouldn't have learned the real lessons that Bitcoin is supposed to teach you. I think that the lessons that Bitcoin teaches you are to lower your time preference. Lowering your time preference means that you prefer the future over the present. So you'll do whatever you can in the present to improve your future, to make it so that your future is better. Having high time preference means that you're preferring the present over the future. So let's say, for example, you eat fast food, you get it delivered to you, you're spending extra money today in order to get that food, you're buying unhealthy food because it tastes good. You prefer the present, you prefer your taste buds being rewarded over your health in the future. That's high time preference behavior. So the people who buy Bitcoin using leverage, let's say they buy it with 50x, 20x, 30x leverage, they get liquidated when the price comes down even 5 to 10%. They lose their Bitcoin. And then what that does is it cascades into more selling because the people who have a little bit less leverage than that then get liquidated. Then the people who have less leverage than that get liquidated. I think that Bitcoin is really great at washing out all of the excess leverage, washing out all of the tourists, washing out all of the people who don't truly understand what they own, and rewarding the people who hold for the long term. Your goal here shouldn't be to try to time the short term. It should be to hold. It should be to buy Bitcoin and just wait 4, 5, 10, 15, 20 years, however long you can wait. So now if we take a look at the moving average price of Bitcoin, this is the 4-year moving average price, you can see that it only goes up. It only goes up because there's not enough supply of Bitcoin to make it go down in the long term. The supply eventually runs out. The people who are willing to sell their Bitcoin eventually run out of Bitcoin. Germany can't sell their 50,000 Bitcoin again. Other people who have thousands of Bitcoin who sold can't get that Bitcoin back. So eventually the supply runs out. And then in that period, Bitcoin's price starts going right back up. So what you see here is that over time, Bitcoin's price only rises. So if you had bought in 2014 and the price fell after you bought it, at some point you would make that money back. At some point you would make that savings, the savings that you had in dollars that you put into Bitcoin, you'd get it back at some point. So what I like to think of is that this is the price of Bitcoin. This is a distraction. So get rid of the distraction. This is what makes it so hard for you to hold Bitcoin. When you see the price go up and then come down, when you see it go up and then come down, when you see the price go from 126,000 to 101,000, 102,000, whatever the price wicked down to on Friday, when you see that happening, you panic and you worry and you think about how it's going to go lower. So focus on this. Get rid of the distraction, focus on the actual price of Bitcoin because over time you're going to see that it does go up. It will keep going up. Over time, you're going to see that whatever Bitcoin you have is going to be enough for you to retire. Bitcoin is going to give you financial freedom. If you hold Bitcoin, I like to think that you're pre-rich because you have a lottery ticket that you know will win at some point in the future. You just don't know when. So why do so many people lose money when they buy Bitcoin? It's because they try to time the market. They try to look at this chart and sell the tops and buy the bottoms, sell the tops, buy the bottoms, sell the tops, buy the bottoms. Why is it that $19 billion of crypto holdings positions were liquidated on Friday? It's because people can't time the market. You can't time, it's impossible to time the market. It's impossible to see where Bitcoin is going in the short term. You can only see where Bitcoin is going in the long term. So if you take on leverage that allows you to borrow fiat and pay it back over the long term and you can't get margin called, maybe that's a smart decision. But using, let's say, 10, 20, 30x leverage to buy Bitcoin because you think it's going to go up in the short term is, I think, a very stupid decision. The reason why it's so hard to just buy and hold Bitcoin is because it takes work. You have to create more value than you have today in order to buy more Bitcoin in the future. So if you keep creating value, if you keep building businesses and you keep creating more ways to help other people, you're going to be able to buy more Bitcoin. And you have to do that as a prerequisite to owning Bitcoin. So if you don't do that, if you don't create more value, if you don't help other people, then you're not going to be able to buy Bitcoin. If Bitcoin's price dips and you're creating value for other people, that just means that your purchasing power has increased. So you should be happy if Bitcoin's price comes down. If it goes up, that means that you're losing purchasing power. Your work, your labor is decreasing in purchasing power, and you can buy less Bitcoin as a result of the price going up. So let's say, for example, when Bitcoin was at $10,000, you could buy 10,000 Satoshis per dollar. When Bitcoin was at $100,000, you could only buy 1,000 Satoshis per dollar. At some point, you're going to see that number keep falling. Today, you can only buy something like 900 Satoshis per dollar. At some point, it'll be 800, then 700. When Bitcoin goes to a million, it'll only be 100 Satoshis per dollar. So your goal should be to accumulate today because at some point, today's price is going to be a rounding error. Today's US dollar price will be a rounding error, but the amount of Satoshis that you get will not be a rounding error. The amount of Satoshis that you get today will be a significant portion of your total portfolio in the future because at some point that Bitcoin that you buy today is going to be 10x, 100x, 1000x, whatever it is today. And at that point, you'll only be able to buy 1/1000th of the amount of Bitcoin that you can buy today with the exact same number of dollars. And to really put that into perspective, I want to show you how over time, if you have a certain amount of money that you're buying Bitcoin with every single month, that amount of money is going to keep buying you less and less Bitcoin. So let's say you buy $500 worth of Bitcoin every single month and you keep buying it. Bitcoin grows at 35% per year. In the next 1 year, you would have bought something like 5,236,790 Satoshis. You can see that in column E. So column E, row 2, E2, 5,236,000 Satoshis. In 2026, so the following year, not 2026, but October 2026 to October 2027, you would have bought 3.8 million Satoshis with the same $500 per month. At some point, you'll only be able to buy 1.5 million Satoshis. That's in 2029. in 2035, you can see here, you only get 260,000 Satoshis for the same $500 per month that you buy Bitcoin with. At that point, if Bitcoin's at $2.3 million, that means that whatever wealth you had from before has increased in value. So let's start with 0 Bitcoin here. Your 5 million Satoshis that you accumulated in the first year, your 3 million Satoshis in the second year, the 2 million Satoshis in the third year, and so on. In total, you'd have 19,194,000 Satoshis. But that Bitcoin that you purchased would now be worth 442,000 US dollars. But in total, you would have only put in $60,000. So your Bitcoin investment, the amount of money that you put into Bitcoin, would only be 13.57% of your total portfolio. And that's based on these parameters here. So if Bitcoin grows at 35% per year and you buy $500 worth of Bitcoin every single month. So whatever you save will be worth way more in the future than whatever you're able to buy in the future. So you can see here, your total number of Satoshis would be 19,193,476. You would have grown your portfolio by 382,000, all by just buying Bitcoin and holding, by just buying Bitcoin and not worrying about the noise, not thinking about, oh, this trade news happened or this trade news happened, or I want to trade in and out and I want to buy Bitcoin and sell it at the top and then buy it again when it comes down. All you had to do was buy $500 worth of Bitcoin every single month, and that's it. It's as easy as that. That's all you had to do, and you would have had $442,000. But what most people will do is they'll buy here, then they'll sell here. And they think that the same patterns will continue as what happened in the past. We'll have the same 4-year uh, pattern in price, the 4-year cycle. They think that that'll continue forever. So they try to time it and they try to make their decisions based on past knowledge when Bitcoin has completely changed from whatever it was in the past. In the past, Bitcoin's price was completely dependent on retail investors and their emotions. Retail investors are a lot more emotional than institutional investors. In the future, Bitcoin's price is going to be determined by institutional investors. Institutional investors are the ones who are buying. They have basically unlimited capital. They can keep buying more and more Bitcoin because they can borrow as much money as they want to. They can borrow as many dollars as they want to at very, very low interest rates. So all you have to do is buy and hold, buy and wait. That's it. You don't have to trade in and out. You don't have to use leverage. You don't have to do anything special. You don't have to do anything crazy to have more Bitcoin. Just keep creating value, buying Bitcoin, and storing it safely. That's it. Once you get past that thinking that you need to outperform Bitcoin, that you need to buy all these random shit coins, and you need to borrow money at 10x leverage to buy Bitcoin so you can increase your returns. Once you get over all of that, it gets so much easier for you to just buy and hold. You can't outperform Bitcoin, at least for now. In the short term, every other asset is going to underperform Bitcoin. If you try to leverage trade, let's say you use 10x leverage, you would have gotten liquidated on Friday. If you tried to do 20x leverage, you would have gotten liquidated on Friday. On the other hand, if you just use a small amount of leverage, you use a small amount of your stack in order to borrow money to maybe sustain your lifestyle, you wouldn't even be worried about what's happening to Bitcoin. This is the goal. The goal is to, over time, stack as much Bitcoin as you can so you can take on bigger and bigger loans against that Bitcoin, because you know at some point your loan is going to be so small compared to your Bitcoin collateral that you don't even have to worry about paying it back. Instead of trying to time the market, just hold on to your Bitcoin, avoid shitcoins, avoid all these special strategies that allow you to accumulate more Bitcoin in a shorter period of time. None of it works. Just buy Bitcoin and hold. Bitcoin is a way for you to get rich slowly. Too many people think of it as a way to get rich quickly. And this is why most people fail when they buy Bitcoin. This is why most people lose money when they buy Bitcoin. They don't actually understand what they're buying. They just want to use it to get more fiat so that they can spend their money on more stupid things in the real world. They don't actually want to improve the world. They don't want to actually improve the money. All they want is to improve their own lifestyle. The intention there is completely selfish, and Bitcoin punishes you for that. So again, get rid of the distraction. Stop looking at the price every day. Stop trying to time the market. If you have to, that's perfectly fine. Just don't sell. Just hold on to what you have. Don't sell. Don't trade. Don't use leverage. Don't think that if Bitcoin's price is going down, it's going to zero. It's not. Over the long term, it will go up. Keep dollar cost averaging into Bitcoin. If you have a large sum of cash that you want to buy Bitcoin with today, I would personally say just buy it. Don't even think about what's going to happen in the short term. Just buy the Bitcoin and wait. That's it. I'm going to be doing a free webinar where I teach you the buy, borrow, die strategy and applying it to Bitcoin. If you want to sign up for it, you can sign up here to scan this QR code, or you can go into the link in the description to find a link so that you can sign up for it. It's free. Go sign up for it. I think it'll be very valuable. Other than this, just stack Bitcoin, keep buying over time. I think that you're not going to regret it. If you keep stacking Bitcoin for the next 10 years, you're going to see that whatever you stacked is worth way more than the amount of money that you put into it. And if you want to learn more about Bitcoin, watch this video here. I explain why I think that Bitcoin's returns are going to accelerate over time rather than diminish.